Hi guys, thank you for tuning in to the next episode of the smart money concept. So on today's video I'll be talking about order blocks. What are order blocks? So defined as market behavior that indicates pile up of orders from banks and institutions. Since banks and institutions are the ones which move the market, it is very important to see where they are active and increase the probability of winning in your trades. They are a special supply and demand zones which are formed when there is a block order. So a block order comes into play as banks buy or sell in the market. So banks use special orders for buying, selling, taking profit and closing orders. If you watch the video on the how the market moves from the trading for beginners section, the other playlist, you actually get on that other video I talked of Elliott waves, that impulse wave number 1, then we've got take profits. Impulse wave number 3, we're taking, many people have discovered what. So now we're now talking, so who is taking profits? The institutions are the only ones with enough money to cause a move like that. They know that they have to take orders at the next or at the previous higher low, and then they continue moving up, forming an impulse. That's what they will always do every time. And they also have to take out other traders. So that's just how it is. So institutions, they don't just place positions randomly, as it may result in losses on their part. So they split position into small manageable blocks, which are called order blocks. So there are basically two types of order blocks. We've got a bullish order block and a bearish order block. So a bullish order block, so it is the last bearish candlestick or a green candle before an upward move. Sorry for that, I meant a bullish order block. It is the last bearish candlestick before an upward move. So usually results in break of structure, making a new higher high. So if this is for when we are in an uptrend. So if we are in an uptrend, we've got the impulse wave and the retest. So the retest will have the last red candle before price moves up aggressively, forming large green candles. So the last red candle becomes our order block. So the last bearish candle acts as support, and if price was to return there, it's obvious we have to buy, guys. We have to buy, like buy. And then bearish, it is the last bullish candle, which is a green candle before any downward move. So usually results in break of structure, making new lower low. So this last bearish candle acts as resistance, and if price was to return there, we have to what? We have to sell. So this is an example of a bullish order block. So let me mark this area. So we've got our peak there, number 1, number 2, and here let me use a different color. So this is our what? First higher low. Then the price broke up. I think you can appreciate this color where there is an arrow there, forming a new higher high. So price then retested there, retested our what? Our last order block. I can zoom in. There are two arrows. If I can zoom in where there are two arrows, so we've got, let me use a different color. So we've got this last red candle. Remember, we're in a bullish order block, so the last red candle. So price came down, broke the structure, and then, so this was our area of what? Order block, and then it came, retested there and went up. So this becomes our order block, and retest, that's where you enter your what? Here, retest to the last order block where I marked with the purple color. So yes, so this is what a bullish order block will look like. And then we've got a what? A bearish order block. So for a bearish order block, remember I just started there. If lower low, lower high, then break of structure, return to what? Return to order block, and then price will definitely sell. So don't say here W, here M's and stuff. Of course you can use the M, but here you are mainly focusing on the what? On the market structure. Please note, you are focusing on the market structure, not anything else. So yes, here you can appreciate, I think, so price came there, went up, there was break of structure, so this became our order block. It came, it touched the purple area, so maybe there were sales there, but I'll explain more on how to refine order blocks. And then it broke this structure, went down, so this one becomes our next what, or the last one becomes our what? Our order block. And then it went up, creating a new lower low. It broke the structure. This area became our order block, and then end. This technique allows you to enter with on spikes, on wicks. You can just enter on the tail of the candlestick, on the tail, and then you'll be shocked seeing someone with a nice trade where they entered on a spike, like this spike, like just this spike. So you can imagine, guys, you can imagine, this is how people make sniper trades. I know on the trading for beginners section I was saying conservative, but then with this knowledge, guys, you can actually make good trades. So on the next video I'm going to be showing you how I draw or mark order blocks on my MT5 and MT4 chart. Thank you, guys. Please subscribe. Enjoy. Have nice peeps, guys. Thank you.